Crypto Pirates Daily News, June 16, 2021. Latest news headlines. According to a new poll, 1 in every 5 Kiwis is bullish on cryptocurrency investments. What working from home, JobKeeper, and cryptocurrency investments imply for Australian tax season. Saylor, CEO of Microstrategy, asserts that Bitcoin is not the only cryptocurrency that can prosper. Tanzania is on the verge of adopting cryptocurrency and Bitcoin. Ethereum can recoup $3,600 in the following manner. Representative Maxine establishes a task force to study cryptocurrencies and CBDCs. Elon Musk will assist cryptocurrency miners in forming the Bitcoin Mining Council. According to a new poll, 1 in every 5 Kiwis is bullish on cryptocurrency investments. Cryptocurrency investing is becoming increasingly popular among New Zealanders, with 1/5 of those polled planning to or having previously invested in digital assets. The research also discovered that young Kiwis are more inclined than older generations to use micro-investing platforms. Over 20% of New Zealanders intend to or have already invested in cryptocurrency. Investing in cryptocurrencies and shares is on the rise in New Zealand, with young people leading the way ahead of older age groups. According to a survey performed for the Financial Services Council, FSC, 40% of Kiwis are currently using or plan to use micro-investment platforms, according to the New Zealand Herald. According to the poll, 21%, or 1/5 of 2,000 respondents, had either invested in cryptocurrencies or want to purchase digital coins in the future. According to the research, this is a 7% increase since March 2020. Between March of last year and April of this year, actual crypto investors surged dramatically, from 3% to 9.5%. Richard Kiwis, Chief Executive Officer of the FSC, stated, "The data demonstrates that New Zealand has followed the worldwide trend of investing in shares, as well as more speculative assets such as cryptocurrencies, since early 2020. Kiwis emphasized the incredible surge in digital investors in the last 18 months. Our research found that 38.2% of adult New Zealanders use or intend to utilize micro-investing platforms." According to the CEO, the percentage figure relates to 1.5 million New Zealand citizens and reflects a dramatic shift in how we are choosing to invest our money. Kiwis underlined that younger New Zealanders have been quicker to adapt, with 55% of individuals under the age of 39 likely to use platforms like Shareases, Hatch, or Stake. The poll also found a significant increase in stock investments, with respondents holding New Zealand shares increasing from 23% to 30% and those holding overseas shares increasing from 11% to 18%. New Zealanders are concerned about the security of new investment platforms. According to the research, traditional internet banking, as well as money transfer and mobile apps, are quite popular, with the majority of individuals having used or intending to use them. Simultaneously, less than half of respondents were utilizing or planning to utilize newer technologies such as digital wallets such as Apple Pay and Google Pay, buy now pay later services, about 43%, micro-investing platforms, 38.2%, digital currency, and robo-advice tools. The COVID-19 epidemic is thought to have spurred technological adoption. The ease of access that technology affords makes investment more tempting for people who previously did not consider it as an option, said Richard Kiwis. The first motivation given for adopting micro-investing platforms is to increase personal wealth through smarter investments. The desire to enhance financial knowledge and capacities is the next main motivator, followed by their simplicity of use. According to the survey, many New Zealanders are still concerned about security issues related with new investing technology. The majority of those polled were concerned about the hazards of internet fraud, identity theft, and scams, which could result in financial losses. A whopping 80% of Kiwis expressed concern about their privacy. After a number of high-profile hacks and ransomware assaults, it is understandable and encouraging that many people are concerned about the protection of their personal information and funds when utilizing online platforms, the FSC official added. Clypian feels that it is critical that the financial services business stay up with new investment and personal finance management tools, while also working to offer the information needed to support financial decisions. What working from home, JobKeeper, and cryptocurrency investments imply for Australian tax season? We're halfway into June, which means tax season is quickly approaching. Before you sit down to do the paperwork, or hire an accountant to do it for you, gather all of the documentation you might need to support your tax return. Here are a few things you should be aware of before filing your tax return. What if I worked from home? Many people will spend the majority of the current fiscal year 2020 to 2021 working from home. You can deduct home office expenses such as equipment or furnishings, as well as internet and phone usage. However, you cannot claim deductions for things like coffee and tea, your house rent or mortgage payments, or anything your company has paid you for. If you want to claim your expenses for working from home, you have two choices: the streamlined temporary approach introduced during the pandemic, or the traditional procedure. The Australia Taxation Office, ATO, introduced a kind of blanket sum last year that you may use to compute your working from home deductions. According to ATO Associate Commissioner Tim Lowe, the temporary shortcut lets you to claim 80 cents for every hour worked at home, and it is still in effect for this fiscal year. All you have to do is calculate the amount of hours you've worked from home and multiply that by 80 cents per hour, and that's your working from home deductions, Mr. Lowe adds. Two things to keep in mind: it's all-inclusive, so it covers all of your working from home expenses, and second, you'll need to keep track of the number of hours you've worked from home. A roster, journal entries, or timesheets will be valuable as evidence for it. The old technique, or the fixed-rate technique at 52 cents per hour, is a little more involved, but it allows you to claim each item individually. If you use the 52 cent per hour method, things like internet and phone charges may be deducted, but only if they are work-related. Tech products such as your laptop, tablets, and mobile phone calls can also be claimed for the time you use them for business. Anything that is personal in nature is not deductible. According to Mr. Lowe, you will need receipts to justify your spending, and you can only claim for the percentage that you utilize for work. The ATO's Tax Essentials outlines how and when to lodge, what you need to include in your return, and the deductions you can claim. Mr. Lowe also recommended individuals to consider discarding the shoebox of receipts in favor of the ATO My Deductions app, which he claims allows you to capture receipts and track your expenditure throughout the year. What if I get JobKeeper or JobSeeker? Nearly 5 million Australians received JobKeeper or job seeker payments, which are considered income and must be declared to the ATO. Unless you're a sole proprietor, Mr. Lowe believes it won't make much of a difference to you. If you have JobKeeper and are an employee, there is nothing you need to do. That income will be included in your tax return and income statement, and the ATO will automatically include that information in your tax return. If you received JobKeeper and are a sole trader, for example, you must manually include that revenue as business income in your tax return. We acquire such information from Services Australia when we use JobSeeker. That revenue, once again, is automatically included by the ATO by the end of July. What about my secondary hustle? According to Dr. Melissa Bell-Isle, convener of the Griffith University Tax Clinic in Brisbane, if you took on some more side employment during the previous fiscal year, declaring any additional revenue depends on the activity and how you operated. So, if you're an Uber driver or something like, you're subject to a couple different rules. They have distinct tax rules for those types of jobs, she says. If you've begun making a little extra money on the side and aren't sure if it's a hobby or a company, Ms. Bell-Isle told ABC Radio Brisbane that there are a few red flags. Things like regularity and repetition of your activity, whether your objective is to make a profit by your action, whether you're functioning in a business-like manner, she explains. If you're just selling things very sparingly and not really earning a significant profit and not doing it on a regular basis, that suggests you're possibly not running a business yet. According to Mr. Lowe, if it is considered a hobby, the income earned may not be taxable. If it's a pastime, you don't have to disclose it as income, but you also can't deduct the expenses related with it. For most people, if you have a side business, it is taxable income and should be included in your tax return. What about my cryptocurrency investments? If you dabbled in Dogecoin or another cryptocurrency in the last year, your investment may have added another layer of complexity to your return. According to Mr. Lowe, one of the areas the ATO was focused on this year was the capital gains earned by those trading in Bitcoin. It's critical to understand that there are 4 transitions that trigger a capital gains tax event when you trade cryptocurrency. When purchasing, selling, or donating cryptocurrency, exchanging cryptocurrency for Australian dollars, or using cryptocurrency to purchase goods and services, he states. Any of those 4 transitions would likely result in a capital gains tax event. He believes that thorough record keeping is crucial for anyone investing. It's incredibly important to make sure you've got solid records and you document the cost of the Bitcoin, for example, when you bought it, when you exchange it, or when you sell it, to make sure you've recorded the capital gains and capital losses, he explains. Keep in mind that if you've kept the cryptocurrency for more than 12 months, you may be eligible for a capital gains deduction. Michael Saylor, CEO of Microstrategy, asserts that Bitcoin is not the only cryptocurrency that can prosper. Microstrategy CEO Michael Saylor told CNBC on Tuesday that he believes a variety of cryptocurrencies, not just Bitcoin, have a bright future. Saylor, one of the most outspoken Bitcoin proponents, has increased the visibility of his enterprise software company over the last year by investing aggressively in the world's largest cryptocurrency by market capitalization. In a Tuesday interview with Fast Money, Saylor stated that while different cryptocurrencies serve diverse objectives, newbies to the digital asset industry may take time to grasp those disparities. For instance, Saylor described Bitcoin as digital property and a store of wealth, whereas Ether and the Ethereum blockchain are aimed at disrupting traditional finance. Just as you would want to build your structures on a solid granite foundation, Bitcoin is designed to last in perpetuity. It has a high degree of integrity and is extremely resilient. Ethereum is attempting to dematerialize financial transactions and institutions, Saylor explained. I believe that if the market grasps these concepts, there will be room for everyone. Microstrategy said on Monday that company just completed a debt offering with the goal of using the cash to purchase additional Bitcoin. Additionally, the business announced Monday that it is beginning a program to sell an additional $1 billion in stock over time. According to Saylor, the firm may utilize the proceeds from the initial public offering to purchase Bitcoin, retire debt, or for general company reasons. MicroStrategy's stock has up roughly 62% so far this year and more than 400% in the last 12 months. The stock ended Tuesday's session at $630.54, up more than 5% on the day. It reached a 52-week high in February, trading above $1,300. Tanzania is on the verge of adopting cryptocurrency and Bitcoin. Tanzania may soon join the long list of countries preparing for cryptocurrency adoption. According to local news outlet The Citizen, President Samia Suluhu has directed their central bank to begin investigating the crypto industry, in what appears to be another effort by a sovereign country to embrace cryptocurrencies. Only a few days ago, El Salvador took the historic decision to adopt Bitcoin as legal tender. Now Paraguay appears to be following suit, demonstrating that Bitcoin is now being acknowledged as anything more than a currency for internet users. Nations now acknowledge digital assets. Tanzanian President John Magufuli stated in his address on June 14 that we have witnessed the advent of a new adventure through the internet. My recommendation to the central bank is that you immediately begin work on that development. Additionally, she stated that though no East African nation has begun adopting digital currencies, the central bank should play a role in encouraging adoption. He underlined the need of the financial institution being prepared for such significant developments and not being caught off guard. Additionally, the leader stated that the growing impact of digital assets, particularly cryptocurrencies, on global finance is huge and cannot be ignored. Countries embracing cryptocurrency. In Mexico, lawmakers led by Eduardo Murat Hinojosa have already begun lobbying for increased acceptance and public support for cryptocurrency. While the African continent is still lagging behind in terms of recognizing and using the new digital asset, the region has long been a hub for huge peer-to-peer Bitcoin trade. Nigeria, a sub-Saharan African country, has one of the biggest weekly Bitcoin transaction volumes in the world, at $8.5 million. Ethereum can recoup $3,600 in the following manner. Ethereum's ascension to cryptocurrency domination has been a hot topic of discussion recently. NVIDIA CEO Jensen Huang recently joined a growing list of proponents who see a bright future for the world's largest crypto. Even with the recent crypto sell-off, ballparks have been set at $10,000 by the end of 2021. Although ETH was trading near $2,600 at the time of press, its long-term forecast was definitely bullish. Since the 19th May crash, Ethereum has repeatedly challenged $2,900, but each effort at a breakout has been rebuffed. This has resulted in the market experiencing regular downtrends. The most recent occurred between 7 to 13 June, when ETH lost 20% of its value, falling from $2,800 to $2,200. However, the cryptocurrency has recovered to greater levels following corrections. As a result, an ascending triangle formed, with the upper trend line indicating a firm ceiling of $2,900. Justification. At the time of press, the relative strength index was trading in neutral territory, but its predicted movement was quite substantial. Since 19 May, the index has been unable to break above 55 to 60 due to bearish pressure. If the RSI is able to break above this level in the following days, we may see a shift in market dynamics. MACD completed a bullish crossover as it set to break above the half line. The awesome oscillator indicated that momentum was gradually moving in favor of buyers. These were positive indicators as ETH prepared to take another aim towards $2,900. The first obstacle was at $2,650 resistance, followed by another at $2,900. Visible range indicated that these regions experienced a high level of trading activity, which could work against a beneficial conclusion. However, there was little resistance above $2,900. If bulls prevail, a break above the pattern might take ETH to $3,100, and a break above this area could take it to mid-May levels above $3,600. Overall, the jump would indicate a gain of 24% from the pattern's top trend line. Finally, as Ethereum approached the next leg towards $2,900, a breakout to the upside was expected. The RSI, in particular, should be monitored closely in the coming days since it may provide insight into market direction. If ETH successfully breaks out of its ascending triangle, it could reclaim the $3,600 mark in the coming days. Representative Maxine Waters establishes a task force to study cryptocurrencies and CBDCs. Representative Maxine Waters announced the formation of a financial technology task force to examine cryptocurrency and CBDCs and their impact on U.S. politics. America is not falling behind in the fight for cryptocurrency. Representative Maxine Waters announced the formation of a working group to research and regulate the cryptocurrency industry during the most recent session of the United States House Committee on Financial Services. With the exponential growth of cryptocurrency, I've convened a working group of Democratic members to engage regulators and experts in order to conduct a deep dive into this little understood and sparsely regulated business. Today, we will continue this conversation by looking at central bank digital currencies, which are being developed by governments worldwide and are being actively reviewed by the Federal Reserve. CBDCs and cryptocurrencies require additional research before being regulated. Waters stated that CBDCs have the potential to strengthen the country's financial system through technical innovation, but added that further research is necessary to distinguish them from other cryptocurrencies. Waters has been an outspoken opponent of cryptography for a long period of time and has previously used her influence to stymie the previous administration's progress on the topic. Waters signed a letter to the new president in late 2020, following Joe Biden's victory, urging that the new president revoke the office of the controller of the currency's regulations regulating banks and their interactions with crypto and stablecoins in general. According to Waters, the OCC exceeded its authority by permitting banks to store stablecoins in their reserves. Additionally, Her petition impacted the OCC's ability to continue awarding banking licenses to cryptocurrency businesses. Waters made no mention of the task force's other members or the institutions with whom they would interact. Two faces of the same coin. When it comes to cryptocurrency legislation, there are divergent views among US policymakers. The SEC just removed cryptocurrencies from its regulatory agenda for the upcoming quarter, indicating that the agency has no interest in regulating the space. However, the legislative landscape is shifting. While there are some pro-crypto voices in the Senate, such as Cynthia Lummis, there are also some powerful players who are less than enthusiastic about the decentralized world of cryptocurrency. Along with Waters, Senators Elizabeth Warren and Roy Blunt recently slammed cryptocurrency, warning that it was instrumental in the growth of ransomware attacks and aided in the worsening of the climate catastrophe. Additionally, the United States is attempting to advance the design and execution of a possible digital dollar. The project has not gathered traction yet, but it has not been abandoned entirely either. Much of the industry's growth is due to China's advances in this field. Indeed, working committees have been formed to assess the impact of the DCEP, China's digital currency, upon its implementation. Elon Musk will assist cryptocurrency miners in forming the Bitcoin Mining Council. Musk has stated that Tesla will no longer sell any further Bitcoins obtained earlier this year for $1.5 billion. Tesla CEO Elon Musk has now come out to assist in the formation of a Bitcoin mining council that will promote energy usage transparency and accelerate environmental activities worldwide. Musk previously stated that he would not accept Bitcoin as a payment method for his electric automobiles, citing environmental concerns. He stated last week that the electric vehicle manufacturer will not sell Bitcoin and will instead utilize it for transactions after mining shifts to more sustainable energy sources. Musk has now convened a meeting of major Bitcoin miners in North America to establish a Bitcoin mining council. I was honored to host a meeting between Elon Musk and North America's leading Bitcoin miners. The miners have decided to join the Bitcoin Mining Council to promote energy transparency and advance global sustainability initiatives, Microstrategy CEO Saylor stated in a late Monday tweet. Musk responded early Tuesday, "I spoke with Bitcoin miners in North America. They pledged to publishing current and planned renewable energy usage and to requesting that miners do the same. Perhaps promising." Peter Wall, CEO of Argo Blockchain, stated on Twitter that as a founding member of the Bitcoin Mining Council, Argo will advocate vigorously for sustainable mining and increased transparency. Musk has also hinted that he may launch his own cryptocurrency in the near future, following the suspension of Bitcoin as a payment method for Tesla vehicles. Tesla began accepting Bitcoin in late March. Tesla will no longer sell any of the $1.5 billion worth of Bitcoins it purchased earlier this year, Musk stated. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.